Hey guys, what's up? Stock Retail coming back to you. Just excited to carve out a little time and talk about a lot of news and events going on today. First off, we're going to cover the news on Ethereum. That's kind of a big deal, sent rumblings all over the crypto space and the financial space. So you may have seen that news today. We'll cover that a little bit. And you'll see by the title here, yes, I do believe that connects back to AMC, FTX, Binance, and a whole lot of things you've seen the last couple of years. So we're going to kind of bring that in, and I'll share with you a point of view, um, some news, some opinion, some speculation. We'll tie all of that together, and some DD. I'll also talk just a little bit. The box office has been turning upward, and I want to prepare, if you're here for AMC, I want to prepare you a little bit for kind of what I see coming in good ways, but also I see the path forward for how people will attempt distortion. So if we understand the good news of what's happening, then we're kind of FUD proof. So I want to just spend 5 minutes on that. And today, boy, there's a lot of Bitcoin bouncing back. And I know people have sort of wondered for a little while over the past, I don't know, 9 months or so. You've seen me pivot a little bit to talking a little bit more about that. And I want to just continue to share why I have a very, very long-term thesis on that. I've mentioned on this channel and on my Twitter that I'm looking at years and decades, not sort of days and months, on my thesis on that. And so I'm not kind of sweating the volatility of it, but just want to talk about that again in light of Jerome Powell giving an update today. So we're going to kind of tie that to the Fed, and JPE and money printer go Brrr and all that. So those will be our topics. First, let's just kind of hit AMC and some business results. Apologize to some of you watching this in the evening. I know it's going to be a little bright. Dim your screens. I remembered after I made these slides that some of you have asked me to kind of use darker themes. We'll work on that. What I want to kind of show you, so you're looking here at a view of basically 3 years, so 2022, 23, and 24, at the box office, the domestic box office by quarter. And so you can see, and we'll just fly through this, especially for the AMC apes, you know a lot of this already. And a lot of you are probably here for this video for the Ethereum news, and we're going to jump to that in just a minute. So you can see for a while, just as an overall trend, especially if I was to go back to 21, we were significantly up and to the right in terms of the box office. You get some stuff, like if you don't know, Q1 is just kind of always the lightest with movies. You get summer months in Q2, Q3, so those are always a little bigger. And so we enjoyed really great quarters last year, right? We had our two first fully profitable quarters since COVID. Q3 was even kind of a record in terms of some of the results for Q3. And it was more profitable than pre-COVID, which was something I had told you, a year out was going to happen. So that's been fantastic. And then I warned you that we were going to have, I started talking, I think, in kind of October, November, that we were going to have this strike blip. And well, you can see it. So Ghostbusters, Dune and Craven and some others were supposed to be in Q4, and those had gotten moved out. So really, Q4 would have been great. It would have been up here. But those got moved out due to the strike. And we're having kind of this strike blip for a while, right? And you could just sort of visually see it. I think I had another video where I sort of carved out all this white space here that you can kind of see was the strike blip. And then you can see at the end of the year, this year, we start coming back. And actually 2025, if I was to put that on here, gets even a whole lot stronger than this. Some of these out quarters, I've got to update. I would actually say these are fairly conservative numbers now. I have kind of reviewed the movie list for the year, but there's still more coming out. I've always got plugs for what we don't know, but I would just say those are sort of conservative numbers. But you can see, especially after we've gotten through January and February, which were in this quarter, that's when we were really, really not having a lot of movies coming out. That's when Adam kind of tweeted this anemic tweet, I think back in January, and you started seeing the movie industry respond by they've put some more movies into the back half of the year. Like Moana 2 was a great example. That wasn't on the list before Adam's tweet, and within a day or something of him tweeting, that got announced. So we've got some better results coming. You just see clearly up and to the right. But we just lived through January and February in particular. Now, recently you've seen it's been great. Dune has been awesome. Panda 4 has been awesome. We got Ghostbusters coming. So even this is a little misleading. Like if I was to show it by month, you would see March looks really great. And so we're in a much better place. And that's what I want to set you up on, because we're going to talk in a minute about sort of the difference of when an earnings release comes out and how it's hindsighting, it's backwards looking, and where we're going to be when the Q1 earnings get reported. So you just lived through recently the Q4 earnings call. You might remember that. Well, you can see just the size of the box office. and what we're about to get reported out for Q1 when we get to that. So keep that in mind for a minute. But I also want you to remember, and I've tweeted this, I've talked about this in a few videos. It was great to see Adam and the team start to kind of acknowledge it publicly as well, that in the future, you're not going to need the box office to get back to pre-COVID levels to see pre-COVID profitability. In fact, even better. And just think too, remember these 2 quarters here, Q2, Q3, were profitable. Since then, we've added popcorn at Kroger, right? Now, if you don't know, Kroger has 19 brands. Go to their website and you can check. Here in Oregon, where I am, we've got a store called Fred Meyer. Everybody here just calls it Freddy's. But Kroger has, brands all over the country. So I think Publix is in there. Forgive me if I've got that wrong, if that's not one of their brands, but we're definitely in Publix. And you've got, Kroger itself, and then a whole host of other brands. I went to the website and counted them. There's 19 different store chains that Kroger has. So when Adam says, we rolled out in Kroger, you got to imagine how many hundreds or even thousands of doors that is. Now, we already were in Walmart. We added Amazon. In the meantime, remember a little while back, we were hiring a new VP role for distribution of new content. So that means, if you recall, here in Q4, we had Taylor and Beyonce. Well, in the future now, we're going to have more of that, right? You don't hire a VP for distribution if you don't plan on distributing something. So all of that, just take like this box office level and imagine all of this has come after that. And then we've added candy, and perhaps we're adding beer and wine. So consider the level of profitability we would have had in Q3 and Q2 last year if all of that had been implemented. If you had distribution, you had thousands of new doors, plus Amazon added for popcorn, you had candy added, who knows, maybe we get beer and wine here in the rest of the year somewhere, you've added all the distribution. So what I want you to be hearing is, as we go through the rest of the year and as the box office is recovering, we're going to have actually higher profits on less box office. That's fantastic management, and I see it in my forecasts. If you followed me for a little while, my forecasts have been pretty accurate. So I have, I don't mind sharing that with you guys now. In the past, I just was trying to be careful not to sort of overhype. But now that I keep getting it right, I don't mind sharing. You're going to see increased level of profits, even on decreased box office. And now imagine what happens in 2025 when you start getting those mega box offices back. And by the way, in Q4 of this year, I have a feeling we set a new record, even potentially even in Q3. Q3 is a little more dicey. I need to kind of nail down that forecast. But you're just going to see some really good results coming, and they're coming fast. Like, these are not far away. In terms of actually living in these, Q3 starts in July. Did I get that right? So 1, 2, 3, 4, 5, 6. Yep. Q3 starts in July. Well, that's basically just like 3 months away. So you're kind of 3 months away from starting to live in this world over here with all of this stuff on top of it. Think of this as icing on the cake, or whatever you want to call it, or even just a new layer to the cake. It's a taller cake. But here we are. We're about to have our earnings release, probably is in May. I think usually Q1 gets reported in May. And so I want you to think about that in terms of, we're still going to be reporting out the strike impacts. And just look on the left, sort of this slide title. That is going to be like looking in the rear view in a very fast moving car. I kind of got Tracy Chapman in my head. I was showing my kids that song maybe a week or two ago. We've got a fast car, and we can get to a better place. And we are getting to a better place. But you just got to understand what the shorts are going to do to you so that you're prepared for it. So that's all I'm doing here, is just kind of preparing you so you have the knowledge to understand we're going to be doing very, very well. But then we're going to publicly report out this Q1 number, and it's going to be like, oof, that was a little low. So, we will not be surprised. We'll have already known it. And hopefully, I believe in the team's skill at sort of saying, well, okay, yeah, we're reporting these results, but here's where we really are. Because again, we're going to be living, so May is Q2. We're going to be living in this kind of halfway through Q2 when we report Q1. Things are going to be going a lot better. So I'm feeling good about that. The other thing to keep in mind related to all of that is, we always get trolled on cash, right? But we know out of Q4, we finished with, $800+ million in cash. If you want to look at total current assets, it's higher than that. And so you're going to see a cash burn reported for Q1. And then, of course, the shorts are going to jump on you for that. But you're going to know, yeah, that's in the past. That's several months behind us now. Here we are in Q2 when the results are going a little better. And not only that, I only have to make it a little bit farther, and here come profits again, kind of maybe in Q3 and definitely in Q4. So I've said time and again, I started saying it last fall. I understood why Adam did the dilution. He set up our war chest. He set us up to get through this strike blip. We're definitely not going bankrupt, which, by the way, kind of addresses some of you came to me on Twitter and said, oh, there's this weird call that, one of our sort of, I'll call it all-star list of shame, maybe, trolls, just an epic level troll. So I don't know. Maybe that's almost a compliment. Hopefully he's never going to take that as a compliment. Some of you will know who I'm talking about. Had a call with a so-called lawyer who, Apes already did DD and saw this lawyer has like maybe 3 cases ever with her name attached to it, who, by the way, is a lawyer, not a financial analyst, right? And if you've been around me, you know that my forecasts have been very, very accurate, as I said. So I really don't care what some rando lawyer has to say about our results. But anyway, they had a conversation talking about bankruptcy, and it's like, if you guys want to listen to a troll and some random lawyer I've never heard of talk about that on some staged call, you be my guest. But I have not even given it a listen because I'm just laughing it off. And it's like, so I just want to prepare you guys for the types of short and distort you're going to get. And now you're going to know, like, I don't even care, guys. We're moving towards profits as we always were. The strike just delayed that a little bit. All right, so let's talk about what probably a lot of you are here for. The Ethereum news today. I'm saying 2021 called because what you need to understand, if you're new here, there is a whole history on Stokens, or sort of stock tokens. Securitized token offerings is another word for it, STOs. So whether you want to talk about coins, tokens, STOs, all kind of different flavors of some similar topics, this goes back to 2021. And you can go find, I'm going to kind of encourage you to look up a playlist I have that I'll add this video to even, of kind of what I call the Great Unwinding. And just all you need to know is you've heard of course, the buy button removal of 2021. So Robinhood and actually interactive brokers, and of course you've heard of Citadel's role in that, remove the buy button in late January of 2021. But you may not have heard that Binance, CM Equity AG, and FTX ends up getting involved, and I think Bittrex and some others created AMC, GameStop, and a couple other meme stock tokens the night before, basically, the buy button was removed. So tokens is a big deal, kind of goes back to a lot of the fraud and manipulation on meme stocks. I'm not going to cover that again in this video. I've got a whole playlist you can go through, including all the timeline and all of this, just documented so you can see, sort of sourced, backed up timeline of what's happened on tokens, what's happened with FTX, what's happened with Binance, and all of that. So what I just want you to know, connected to all of that, and why I'm connecting that to tokens, some of us have believed that, and I've hinted at this before, I've talked about cross-asset trading, I've talked about wrapping paper, you've heard me use the term wrapped. Some of us believe that some of the various elements of crypto were used to wrap assets and effectively, basically naked short meme stocks. In particular, AMC suffered a lot from this. And so some of us believe that Sam was sort of sent in to take down AMC and maybe even take down Bitcoin. Now that's a little harder to believe they thought they could accomplish that because of the strength of the Bitcoin network. But that is a speculative thesis that's out there, and that will continue to develop, and I'll continue to share things as I feel more comfortable sharing them. Sometimes I hold stuff until either one, maybe there's stuff I don't fully understand, so I'm working it out, and sometimes there's stuff that it's just so speculative, I'm just kind of more careful. But on Ethereum, I will say, so you see today the news, SEC probing crypto companies in Ethereum investigation as hopes for ETF dim. Then it kind of comes out, also it came out today, Ethereum Foundation faces inquiry from a government. That was this morning from CoinDesk. On the left is more recent. And actually what's happening, so I saw a lot of like crypto bros kind of being like, oh man, the SEC hates crypto and whatever, because there's some discussion on whether Ethereum is a security or not. Hold that thought, because I'm going to come back to talking about safe harbor rules and how something determines whether, and I will explain safe harbor rules, by the way, if you've never heard of that and you're like, what the heck are you talking about? I'm going to explain that a little, and why the SEC is talking about Ethereum maybe being a security. And so we're just going to tie all that together. But all you need to know is there is some speculation and some DD that's out there that basically says, hey, in some ways, Ethereum was part of, let's call it almost kind of the plot. So yes, it's very conspiracy theory because it was a conspiracy among various players to stop us. Sorry, I think I said conspiracy and my computer must have heard Siri somewhere in there and she was just starting to type out the things I was saying. All right, so I'm not sure if you know, Ethereum, look at the top right, is basically a Swiss, not the Ethereum Foundation is a Swiss nonprofit. So that's the sort of Ethereum Foundation faces inquiry from a government, right? That was the news this morning. You know that UBS, that's top left, UBS, Switzerland, took over the problems from who? Credit Suisse, Switzerland. So we're talking swaps. We're definitely talking wrapped assets. Oh, I don't know why Siri turned on again. Boy, stay off, Siri. Let's go back. Sorry, guys. I don't know what the heck's happening here. But anyway, we are talking Switzerland. Siri, I'm not talking to you. And so...
Okay.
This is just a comedy of errors, guys. Now my phone thinks I'm talking to that. Somebody... gremlins are in the system today. All right, so... Credit Suisse, UBS, Ethereum, all touching Switzerland. I find that odd. And, perhaps connected back to, if you followed the issue with swaps, Archegos, right? You got to go all the way back to Archegos with Credit Suisse as well. And the timing of the tokens and everything. We are living out a movie, in my opinion. This is crazy. Granted, I am showing you incredibly speculative, loose stuff here. I said in another video recently, someone was trying to, in fact, I'm watching a couple people on Twitter who are trying to throw shade and make you afraid of Bitcoin. And they're kind of saying, bad guys are buying Bitcoin, so therefore Bitcoin's bad. Well, that's the transitive property. It's not good logic. So here I am kind of saying, well, these guys are Swiss. Ethereum is Swiss, therefore bad. That's not very good logic, and I'm just going to admit it. But I do want you to at least just see these dots out there, and we're all going to do DD and be understanding if there's connections or not. So let's talk about safe harbor. And I'm going to tie this all together now back and why I'm talking so much about Ethereum and this idea of wrapped assets and all of that and the tokens. You can find me all the way back. Just look up, my name on Twitter and look up just the word harbor. So you can find me talking about this all the way back in 2021. I'm going to show you a 2022 tweet and a 2023 tweet in a minute. But you can go all the way back to 2021 and I was talking about this. And the reason is, back then I kind of was tipped off by somebody who knew some things and I just went myself. And so, we say always do your own DD, right? So they didn't really give me all the answers. They just said, hey, you might want to look at this. And so I went and I literally read all the rules on safe harbor. And by the way, this connects back to Hester Pierce. A lot of apes understand that Hester has been very sort of anti-retail, pro-big business, and even comes from basically the hedge funds and the banks. So if you think about who's been fighting Gary, who's been fighting transparency and disclosure, well, Hester's one of the ones at the front of the list. And so she had kind of updated the safe harbor rules. And as you go through there, so you can see in 2022, this is actually, by the way, the timing is when FTX went down, FTX went bankrupt, the regional banks started having all kinds of problems. And so I was telling you, as that was happening live, hey, guess what? You need to go read about safe harbor because this is also going to connect to Binance and CM Equity, and a lot of things are going down. Well, that was before Binance then finally got in trouble. So I was kind of telling you stuff was happening. I was kind of calling the play in sort of 21, 22, now 23, and now I'm telling you here in 2024. So I don't know. Either I'm a prophet or I'm lucky, but I've been telling you what's coming each time. And so what I want you to understand with safe harbor, I'm going to go through that. So let me pull this up. Safe harbor basically means we're going to kind of think about like a force field or a bubble. We're going to put you in this bubble where you don't have to be under the securities rules and regulations. You've heard of Reg Show and securities rules and the 1934 whatever act that Gary will kind of tweet about. There are rules, regulations, and laws that govern how securities are bought, sold, traded, created, tracked, and are much stricter than sometimes other classes of things that we're out there trading, right? So that's been part of the whole thing of crypto and why a lot of the crypto folks are feeling hard done by and feeling like, well, Gary's just coming after us. But if you're here as a crypto person, I really, really want you to go research the use of tokens, the use of wrapped assets as a way to naked short U.S. securities, U.S. equities, stocks, in other words. And so that is why there's a discussion here. But in theory, what happens is, let's say I create a new crypto and I have a whole use case and I have kind of a white paper and I have a blockchain that gets created and a decentralized network, and I build a community of all my peers and we all work together on this great thing, right? So I do want you to hear me say that there are use cases where crypto is fantastic. I love the idea of decentralization. To an extent, I love the idea of anonymity, though, let's be real, with Binance, what got caught was, funding terrorism and slave trafficking. Like, those things are real. And so the anonymity even has its own limits, I suppose. We got to think that through as a society. But that's a whole other topic. All right, so I am not anti-crypto. I want to be really clear. And so the SEC has sort of carved out space for innovation and said, all right, we're going to give you basically 3 years. That's this safe harbor. We're kind of protecting you from all of those other rules and regulations. And you have to kind of have the aim of being decentralized and all these things. And there's some rules to being free from the rules. And you got to pass these tests, basically. But here's the deal. When I read through the safe harbor rules, what I discovered was this list on the right. And there's a lot more to it than this, right? It's more detailed. But I want you to just take a close look at this, and then let's tie this back to what you've seen now with FTX, what you've seen with Binance, what you might be seeing now with Ethereum, and why I have constantly said I think a time is coming when our tokens are getting cleaned up, and that may be part of the squeeze. Hear me say maybe. Yes, I'm speculating, though it is based on DD. But until it comes true, I just have to be thoughtful and sort of say it that way. All right, so let's look at this list. Look under the word hint here. If you have tokens, after 3 years, you must expose your source code, show every transaction you've ever had, provide your token economics, give proof of a decentralized network, provide names of everyone on the dev team, show all tokens owned by the dev team, document future token rights of the dev team. So you have to show your code, you have to show every single transaction there was, and a whole lot more. And what I was saying back in 21, and I will say, back then, I thought it meant we were going to squeeze in January of 22. I did. And I should have thought that through some more. And now, obviously you live and learn, and we've grown since then. And that's why also, by the way, now, even then I didn't say that publicly, but it's really firmed up for me. Just no dates, no prices. That's why you won't get dates or prices out of me. I'll share the DD. I'll share why I think we're headed in a direction. But this is a really big play we're in, perhaps one of the most complicated in the entire history of man, no joke. And so you're not going to get me to say dates and prices. But what I will say, we've been proven right quite a bit the last couple of years. And perhaps this is one of the last puzzle pieces where here's what's going down. If Ethereum wants to prove they're not a security and they don't want to be under the securities rules and regulations, now they're going to have to go, I said in a tweet today, they're going to have to go full kimono. It's a Japanese saying. Some of you know, I worked at a big Dow Jones company, and for a number of years, for, 3.5, 4 years, I worked for the Japanese kind of arm of that company. And so I've learned some things about Japanese culture and business and stuff, and that was a wonderful time of my life. I loved it. Well, there's a saying in Japan, basically full kimono. And it just kind of, I suppose perhaps it's a little inappropriate for some of you. I think it's kind of it's a funny saying, and it's culturally appropriate there. Just the idea is nothing hidden. There's nothing hidden. You're opening up the full kimono. And that is what Ethereum is now going to have to do, because either they're going to prove to the SEC, no, we're not a security. But to do that and to be under these safe harbor rules, they're going to have to reveal all of this. And so my point is, apes win either way, because either Ethereum, let's say they become a security and now they're tracked, and so they're regulated, and in theory under, let's say fairness and transparency laws that we all want to see improve, granted, but there are laws there, and so at least they're kind of under that. So that's a win. Or perhaps even they end up having to reveal some things that, let's say they are caught red-handed, and it proves my thesis right, and a few other folks have this thesis, and the sort of blockchain trail and paper trail and the smart contracts all kind of reveal what we have said for years, that tokens were basically used. And so you get into, Brett Harrison and Sam and CZ and FTX and Binance and everything I've said. So I understand that some of this is probably flying over some of your heads, but some of it is starting to connect for some of you. And the point is, if Ethereum did the things that I believe may have been done, or even let's be careful, like, who did it? If Ethereum was used to do some of the things I believe it was used to do. Now we can talk about who did that. Effectively to print shares of AMC, without legally having the right to do that. In a way that it's not quite accurate to say that, but in a way it is. And so perhaps they've been caught, and this is all going to be part of cleaning that all up, and what I keep calling the great unwinding. Okay, so speaking of which, just to kind of summarize and wrap that up. So I've talked about the tokens were created in 2021, FTX, Binance, Credit Suisse, the regional banks. There starts being all the turmoil in 22 and 23, because, by the way, Ape is related to all of this. So when Adam issues Ape, basically all hell breaks loose for some of these guys. He issues Ape in August of 22. FTX goes down in November of 22. Speculation that I've said, that wrapped assets have been used, and basically various forms of crypto have been used to naked short AMC and to keep our price suppressed and to keep us from winning, which is part of why, like, I can hold longer than they can. And so far, some of them are going to jail, and I'm still out here free as a bird and holding my shares, and I'm going to continue to. And then now, so, basically Ethereum, and let's see if some others, I think there's been discussions of like Coinbase, oh gosh, who else? I'm forgetting right now, but I've got a list. Maybe I'll bring it back out in another video. There's Bittrex. I've mentioned CM Equity AG quite a bit. It's a German company. We will see who else starts to have blockchains and smart contracts tell on them. Okay, now let's touch on the money printer and why I've talked about Bitcoin so much lately, and why that's a long-term thesis. So I just want to make it super clear up front. I believe in the AMC squeeze. My portfolio is like, I don't know, 98%, 99% AMC. Nothing has changed for me. Let me make that super clear. This is starting to be my viewpoint, like I said, on a years and decades level. I have shared with some of you that even I'm telling my teenage children, like, hey, as you get sort of, these part-time summer jobs and stuff, and you're practicing saving some money, this is probably where you want to put it. If you have money you're not touching for years, I'm telling my own children, I'm telling my own mother, that they should consider looking into this. Okay, so this is the level of seriousness I have about this. I want you to kind of understand, we talk about the money printer go Brrr, but I want you to look at the history of it, and you can go out and find this documented. You can see this Fred website. So this is sort of the money supply that you'll hear about M1 and M2. So I'm looking here basically at printing money. Okay. And so you can see from 1960, you can see it was, I don't know, 140 billion, sort of dollars in circulation. Let's kind of call it that. And then what happened in the 70s, well, first off, we had a big recession, but then also you can go back and kind of research the history of Nixon and the Fed and removing the US dollar from being pegged to hard assets like gold and silver. Okay. And so you can notice we kind of go from the 60s, and if you were to go way back, this website goes way back, you'd see this like really flat chart pretty much, and then it starts going up, right? So there's this decision to sort of depeg from hard assets. And then you get the next era. And so you kind of get the growth of the 80s, and I realize it's all of you are probably about evenly divided on whether Reagan sucks or Reagan was awesome. And so that's not what I'm getting into. I'm not talking politics. But you at least, anyone, both the Reagan sucks and the Reagan's awesome crowd, are both going to look at the 80s as a time of businesses grew significantly. Okay? This is an apolitical channel. I don't get political here, but I'm just talking business and what happened. All right, so businesses grew significantly, but you see that that may have been kind of funded by printing the dollar, right? And now that's also, you got to talk the Jimmy Carter era. You know, you're starting to get into when I was a kid. My mom was, some of you kind of know my story. My mom was unemployed for a while. She's an immigrant. She has no college degree. My dad leaves. He moves out of the state. So I understand what this was like. A time of, you think inflation's high now, and you think mortgage rates are high now. I remember, gosh, I don't know, somewhere here towards the late 80s, my mom, or maybe mid 80s to late 80s, my mom having like a 13% mortgage rate. You know, right now everybody's kind of concerned about 7%. Now, granted, you get to a whole conversation on tangenting here about the price of houses too, right? So it's like a multiplier. The rate plus the price kind of causes a problem. But just the point is, inflation was very, very high. Unemployment was way higher than it is now. This was a funky era in the country. And then you can see we kind of printed our way out of it, didn't we? Look at how that just, boom, ramps up. Then you get to the 90s, right? And so, and actually, by the way, you had another recession here. So that's why, look how we come out of recession and we go, you know what? We can print our way out of that. Happens again. All right, so then we get the the dot com bubble, 99, right? And so the problem is this would look actually bigger if I squeezed the time frame differently. But we started printing here, you know, you get to the '08 crisis, and now you start really printing money. Okay, so we get terms like QE and Q infinity and all that stuff. We start printing our way out of the financial crisis. We didn't really do anything. We didn't, you know, put anybody in jail. We didn't stop the folks who are over leveraging the heck out of everything. We just said we'll kind of sweep it under the rug by printing a bunch of money. And I want you to keep following this, because this, I don't care if you are listening to me as a millionaire or you're listening to me and you're on welfare. This has impacted you. This has caused everyday products for you to cost more. And actually, I've told you a little bit in some other videos. I don't want you to think about it as costing more. I want you to think about your money has become worth less. Every single time we print our way out of all these problems and we let Wall Street walk us into these problems, and then we print our way out. You know, you've heard some people say the phrase like, what is it? Like, we make profits private, but we make, you know, disasters, like dealing with it all, public. So, you know, you and I, we pay for all of this when they get it wrong, but they keep the money when they get it right. That's sort of a heads I win, tails you lose kind of a thing. Boy, it'd be nice to be on Wall Street. You never lose, right? You know, you make profits, you keep them. Mess up, just make everybody pay through inflation. And inflation is like, you know, I have a whole video. Please go look at Debasement, and how, like, I just look at that through even the idea of the price of a loaf of bread. The price doesn't really go up, guys. Your money goes down. And so here we are. We print our way out of the financial crisis of 2008. Well, now look. The next phase we went through is, well, let's just make the public pay for locking them down. So they locked us up. And, you know, again, I'm not going to get political. I understand that about half of you believe that was the right thing to do, and about half of you believe it was complete tyranny. And, you know, I don't know, maybe it's not half and half. Some of you are in between. But the point is, we did lock down and we did print the most money we've ever printed. And so now let me show you that over time. Holy cow. So this is what I was saying. So now it looks like we weren't really printing anything. But remember, let me go back. Remember, if I show you in a squeezed time frame, you can see, okay, this actually looks pretty steep up and to the right, doesn't it? But when you zoom out and you see what we've done just in the last few years, now you see, here's the great financial crisis that just looked so huge. Look at what we did to pay for the lockdowns. Look at that. I mean, I'm almost speechless. We have printed so much money. So much money. And that was a time you saw when, you know, the big boxes, the Amazons, the Walmarts, the Targets, and the big tech companies. Now you're looking at, you know, the Magnificent Seven. You see Microsoft and, you know, Meta and Nvidia and Google. Those companies have done very, very well, right? Just look at the stock price over the last few years. Billionaires have done very, very well. How about you? How you doing? How's your groceries? They costing more? So here's what happens. These guys come along. The Treasury Secretary, the Fed, our politicians, and they say, your groceries are more expensive, but hey, don't worry, because your wages are going up. You're getting paid more dollars. But what I'm starting to say, and I think you might be also, is no, my groceries are not more expensive. My US dollars are being drained of value by you to support the rich, prop up the stock market, let the billionaires buy their many, many yachts and homes. I don't have less US dollars. My US dollars are worth less. And by the way, this is not a US discussion. This is happening to the euro. This is happening to the renminbi. This is happening to the Brazilian real. This has happened to the Japanese yen. Look at what's happened in Argentina lately, right? They shut down the central bank. And I believe they're having like surpluses for the first time in I don't even know how long. Look at what's happening in El Salvador. They switched to Bitcoin and they're about to be free of sort of debt slavery to the IMF. And I understand that I probably sound fairly liberal here, guys. And I will say, again, I'm not going to get political, but if you forced me to explain my positions, you'd probably hear me very, very centrist. You would find me being on the right on some things and on the left on some things. I am strictly speaking about, I have a financial background. I have 2 masters in business. This has become my evolving point of view on what central banks are doing to all of us. And they're doing this to you, Mr. and Mrs. Conservative, and they're doing this to you, Mr. and Mrs. Liberal. We are all in the same boat. And it ain't their boat. They're doing this to you. They're printing money up the wazoo. And so what's happening is your money is becoming worth less. Please go watch that video I did on debasement. It will help you see the price of bread over time and the fact that you're paying more dollars for the bread, but that's because your dollars are worth less. And I show that to you with sourced facts on the history of the value of the dollar, which you can go, fact check for yourself. So this, my friends, is why I have started to look at Bitcoin. And I'm like, all right, they can't print Bitcoin. They can't manipulate it in the same way they can with their fiat currency. Did you know the Fed is not part of the government, and you don't elect or unelect the Fed? And you know all of the things that have happened with all the money this country's been sending out to all kinds of things for the last 50, 80, 90, 100 years. Some of them good, right? Like supporting the rest of the world is good. But some of us don't agree with. So, tying that back, who exactly is making your groceries cost a lot more dollars because your dollars are worth less? And it was interesting, just yesterday, some of you know I've published a book. I have an author account. I've never told you guys who I am on that account. I have not kind of crashed these 2 worlds together. I'm an indie author. I'm not like wildly successful. I've learned that, I've gotten great reviews. People seem to love the book. That's been really rewarding. But it is really hard to find an audience when people don't know who you are. And so it's very tempting to tell you guys who I am and try to sell a few more books, but I've tried to stay away from that. One, to not be a shill. One, just because I'm not sure I want these 2 worlds to collide just yet. But I really feel that someday, perhaps especially after we squeeze, which I do believe we will. Hear that word, believe. But perhaps then I may tell you, and hopefully some of you would be interested in buying the book. But that said, it was interesting. Yesterday I posted from that account, and I just sort of told this story about my mom and the things we went through and people who helped me as a kid, and just stuff like they bought me pajamas, or they bought me a backpack, or they bought my mom a car, gave us free food. I was one of those people. And now I have 2 masters in business, right? So I am sort of an exception that proves the rule, perhaps. I got out, but I had a lot of help. And so I saw this thing yesterday. Someone was kind of complaining. I don't know. I don't want to go too deep, I suppose, but complaining about people on welfare. And I just said, you know what? I would look back and I would just be proud of my mom personally. She helped me get out of that. And so it was just interesting. I just looked today and I went, you can go kind of Google this and look at that money printer and say the last 4 years versus how much money have we spent on food stamps in this country the last 4 years. 340 billion on food stamps. And we can absolutely have a good conversation on, is there waste in that? And you'd find me admitting that there is, by the way. But is that really who's making your groceries cost more? You can see visually here to the right. Look at the money printer the last few years. food stamps, this country spent 340 billion, 4 years, sorry. Then, the money printer, what is that? 16,000 billion, 1.6 trillion. I don't know, guys. I don't know what to tell you. Actually, yeah, 16 trillion. Excuse me. Let's get that right. 16 trillion versus 340 billion. That to me is what is making your energy, your food, your entertainment, your travel, your clothes, your college, everything. Just think of everything sort of real and physical in the world. It's not costing more. The value, just the laws of supply and demand in many ways, the value of your money is going down. And ask, who is doing that to you? So that's why I've been talking about this a lot. I want you to understand those concepts. In summary, basically, hey, I just believe in Satoshi more than I believe in money printer go Brrr. That's where I've landed. Some of you disagree, and many of you have been respectful about that disagreement. I'll be respectful back. I'm not trying to sell anything here. I've said very clearly the Bitcoin network is far, far bigger than me. Nobody needs to shill that. I'm just sharing with you my point of view. And again, reminder that frankly, I'm here more for the AMC squeeze anyway. I believe apes will see through the short and distort that's coming. Hopefully I'm helping prepare you for that, but also helping you see that our business results are great, that our management team is doing a great job, and that we're going to move from survive to thrive. I believe that using wrapped assets to naked short AMC has backfired on some people. And as always, I believe we will win. So let's go.